So we're going to bring up a member.
So we're going to bring up.
Invested up passively in a lot of deals.
Wait,
So,
he says he is Dallas's happiest member, correct? Except he spends most of his time in Galveston, so I think he is Houston's happiest member as well as Dallas's.
all right. Here you go. Want to tell them about yourself a little bit?
I do have one great advantage over Madeline, though, and it's not going to occur to you till I tell you what it is. I don't have to brush my hair out of my face. I'm John Pry. 30-plus year petroleum engineer.
Wait, how many petroleum guys are in the room? Doesn't matter if it's jelly or the oil, either one. Okay. Sorry.
You saved that one, didn't you?
I just made that one up. It was pretty good on the fly. I'll get an email about that.
We got a lot of Aggies in here, I know that.
Where's all the Aggies? Make your noise. What do you say? You're like half Hoopers.
What about LSU? Y'all can do this too. Had a great career as a petroleum engineer, worked on everything from little shallow wells onshore to wells at that time that were in the deepest water to date in the Gulf of Mexico, over 7,000 feet. Really enjoyed being a petroleum engineer. I did not realize how stressful that was from time to time. I was always good at assembling a really good team of really smart people that were way more capable than I was. And that's why I have been successful in lifestyles too, because it's easy for an Aggie to find people that are smarter than we are.
That's a high bar.
I was introduced to lifestyles by my younger brother, who was a member here in Houston at the time. He was an HR executive for one of the large mutual fund companies, and he was very successfully buying some single families and duplexes. Oh, well, that's kind of cool. Then he got laid off during one of the financial downturns. So here he is, a lot of money. He's got the education, but he can't get mortgages anymore because he doesn't have a W-2 income. I said, Carl, tell me what you're doing. Show me what you're doing. And it looked pretty interesting to me. So I told him, how about this? We'll each put up half the money, I'll get the loans, and you do all the work. So I naturally started off a passive in real estate even before lifestyles. That rocked on along for about a year, and I recognized there were foreclosures everywhere in DFW that required nothing more than carpet and paint, and they're ready to go for rentals. So I bought 7 of them for all cash, because I figured even an Aggie couldn't mess it up if it was all cash, right? They cash flowed like crazy. I knew they would appreciate over time. I knew the market would self-correct, but I had no idea how they would appreciate. Like an idiot, I waited 3 more years before I decided to check out the group that my little brother had been so successful in. I told him, Carl, you know, what does an HR executive know about real estate? He said, absolutely nothing. Same thing a petroleum engineer knows about real estate, absolutely nothing. They taught me how to do it. So I came. I liked what I saw. Actually, skeptic that I am, I went to the free introductory workshop twice before I joined, right? That's right, I got my money's worth.
On a free workshop, yeah.
I joined and went to my first 2-day seminar with David Fisher in DFW in 2014. And in part of that seminar, he goes, how many of you already have some real estate? I was proud, I raised my hand. How many of you have that real estate for all cash? Very proud of that. You're an idiot, he said. And then he very carefully went on to explain something that I had not thought about, the awesome power of leverage. If I had put down 20 or 25% on those houses instead of 100%, how many houses could I have bought with that same amount of capital? Exactly, exactly. I would have been very, very wealthy long before I became very wealthy. But here I was, a practicing engineer, working my tail off. I had a lot more money than I had time, right? Time. I've realized that for a very long time. So passive investing in multifamily was a natural thing for me. So I jumped in with both feet, went to every event I could. Back then, the online presence was not remotely what it is now. Lifestyle was pretty much all, as far as I knew at least, pretty much all Texas people, local type thing. But I looked at it not as a retirement thing. I looked at it as a diversification. Now, you've got some cash for whatever life brings your way, and you got all your other money in the stock market. That's what I was taught. Very middle-class upbringing. Dad was a minister, and Mom was a part-time nurse, right? The idea of saving up that big pile of money, I got that. I was a real good saver. I was really good at it. But it always bothered me about the other side of that, that your net worth and your income would go down in retirement. But I had no clue about another way to do it until I met you. Passive investing. I only invested in a couple of properties my first 6 months in 2014, because I'm an engineer. I'm like a lot of you other people in here. I want to understand what I'm doing rather than just willy-nilly throwing money around in the stock market like I've been doing for a very long time. 2.5 years later, my brother, Carl, who introduced me to lifestyles, called me one day. He said, you know, with all this real estate investing you've been doing, how close are you to being able to retire? I said, you know, Carl, that's a really good question. I wasn't tracking it back then, right? I knew I had a lot of extra money, and that's great. I could see that pile of money growing. But I put the pencil to it, and much to my surprise, I found that I had replaced my after-tax income with passive investing in multifamily properties. Nobody was more surprised than I was.
Who likes that, replacing a 6-figure income in 2.5 years? Give him a hand. By the way, that's how excited an Aggie gets. Yay. Engineers get really excited.
January 2017, I retired. That was not scary for me at all. I was looking forward to it, but I thought it was going to be at 67, that Social Security age, right?
That's for old people.
Yes.
Yeah.
My wife was surprised. Oh my God, you mean you're going to be home all the time now? It worked out well though. I became much more relaxed. All the stress was gone out of my life. I had no financial concerns. So I've been retired for 6 years now. 3 years ago, we fulfilled a lifelong dream of my wife. We built a second home down on Galveston Island, and now we spend about half our time down there and about half our time back in DFW. The most amazing thing to me in retirement, because I have remained involved with lifestyles and will always be until maybe Lifestyles starts a remote meetings in hospice care when I get to be 90 or 100. Because I remain in lifestyles and I always reinvest sales proceeds and cash out refinances, I never eat my seed corn. Our net worth and our income has continued to grow even in retirement. This is another, go ahead.
I want to bring this up because a lot of you, this concept, he went over that kind of fast, but it is so powerful. Remember how I told you a financial advisor tells you save up that $1 million or $2 million and then draw down at 4% a year? Everybody heard that before, right? Since you retired with Lifestyles, has your net worth gone down or up?
Since I joined Lifestyles in 2014, our net worth was already good by almost anybody's definition.
Because you had a good job. Yeah.
Since then, our net worth has tripled.
Now hold on. 3 times. Take whatever amount of money. It doesn't matter what he did. It's what you would do with the same thing. If you had 100 grand, that'd be 300 grand. If you had $1 million, $3 million. If you have 2, maybe 6 million. Does that sound like a better retirement plan? Give him a hand for doing that. That's the end goal.
Never eat your seed corn. The awesome power of that has been brought home to me many, many times, but never more intensely and closely than in 2022. I've been in about 50 multifamily deals altogether. Zero work, key principle, which he'll explain to you possibly this weekend in a few of them. there have been so many sales of our deals over the last 18 months that after return of capital on sales, after I got my original investment back, our income was was a little bit over $1 million last year. And I did squadouche to make that money. That's
Who'd
an
like to
Aggie
make $1
word.
million a year as a passive? Give him some. That's awesome.
I'm still amazed at that. Our net worth continues to grow and will continue to grow in the future. Another thing I did not expect when I joined Lifestyles was the awesome friends that I would make within this group. You know, I still keep up with some of my old work friends, right? They're good friends of mine. We'll always be in touch. But my week in, week out, month in, month out friends are in this group right here. So what has become the most important thing to me now that we've long since been very well, doing fine, no financial concerns or anything like that. So different things have become important to me now. My time is already my own. Still have one boss. I'm married. Like most of you guys, I married way above my pay grade, didn't I, Soph?
That's not his wife, that's his daughter. You got to say this, you're an Aggie, it comes out wrong.
Legacy is what has become important to me now. There are many components to that legacy. Legacy is giving back to those coming behind me. I'm an ambassador for Lifestyles. You guys have ambassadors up here in Houston. There are ambassadors all over the United States. There you are. Hey, Alan.
Alan's another ambassador down here.
We are not compensated for this. We just want to help people get integrated into the group the same way that we were treated when we joined the group. The other aspect of legacy, and that's why Madeline is so important as a passive mentor to us. Nobody's more experienced as a passive than Madeline is, and nobody has we don't all have to flip our hair out of the way. That's as you can see, hair is not an important part of being a real estate investor. That's important, isn't it? The other aspect of legacy that is important to me is what we're giving back to the next generation. Legacy is more than just money and finances. Legacy is values, ideas, and traditions. 2 of our kids are PIG members, Preferred Investor Group members within Lifestyles as well. They both have their own multifamily deals that have been doing very, very well. Soph is one of them. Her brother Michael is another passive member. He's a mechanical engineer. He's working in California this month for Lockheed Martin. That's great. Long term, though, we're all going to get older. We're all going to get less capable. And in my specific case, I got a lot lazier as I got older, too. So passive investing is natural for me. It's the way that the majority of preferred members are going to end up going if they don't start out that way. But we all have that obligation to share that abundance mentality that Dell has instilled in this group. The abundance mentality is an actual superpower of Lifestyles. My friends are in this group. I've met some more folks this evening that'll become good friends. And we're all in this together. It's kind of like the 3 Musketeers, all for one and one for all, right? We all help, encourage, and teach each other. That is our obligation once we become successful, to give back to those coming behind us so they have the same experience that we had. Although I'm not going to call anybody an idiot the way he did me. It can be tough love sometimes. We're going to hear and learn not what we want to hear and learn. We're going to learn what we need to hear and learn, right? I'm not a very good speaker at all. I do a lot better with questions. Anybody?
Let me ask some questions, then we'll take the crowd, because we have people watching from all over America right now. And you're, you know, I'm in Houston and you're from Dallas, and I know you do it here in Texas, but, you know, did you invest all your money in deals only in Texas, or did you go outside the state at all?
Yeah, early on, they were all in Texas. They're scattered all throughout Texas, from North Texas to South Texas, and, you know, a whole lot of that. But Lifestyles now is a national company with members, lead investors, mentors everywhere. So we're invested not just in Texas, we're invested also in Arizona, Mississippi. In fact, my Mississippi lead is somewhere in this room. Saw her earlier. And also over in Atlanta. And I would be invested in several more states, but I have that same frustration that many experienced members have. We run out of capital before we run out of deals that look good to us by people that we know, like, and trust. And that is a significant irritation to me.
Yeah, it's the opposite. When you're new, you think, am I going to even be able to get in a deal? And everybody goes, well, is there enough deals out there? There's like 600 of these guys that put together deals. So if each of them do one deal a year, that's like 2 a day you could look at. And you can invest anywhere from 25,000 to 100,000, whatever you want to invest in a deal. If you make 100% return, it's 100% on 25, 50, 100, it doesn't matter what you invested. But think about it. Let's say you put in 50,000 a day, right? That you invest starting January 1st. There's 2 deals a day. I bet most of you in this room will be out of money by January 10th. Am I right? My point is you will run out of money. And you'll learn more about that in summer.
I asked you that very question right before I joined.
Very common. That's why.
And you just looked at me and laughed.
Yep. Yep. Because they go, well, Dave, I'm not like the other guys. I have a little bit more capital to work with. I'm like, I meet people from California with millions and millions every day. You understand? To come to my seminar. I don't care if you have 20 bucks or 10 million. It doesn't matter to me. It's what are we going to do? And it doesn't matter if you have 10 million or you have 20,000. You will run out of capital until it doubles again.
And it's not a numbers game of how many deals you're invested in. I couldn't care less about that. 32 deals is more deals than I want to be invested in because it's a lot to keep up with every month.
Yeah, you got to look at your phone, right?
So my goal, exactly. So my goal is to have more money invested in some fewer number of deals because it's just easier for a lazy guy to keep up with, right?
Yep.
Question for you.
Is it easy?
Okay.
I have a question.
Go ahead.
The question is,
Do it the mic. Give me the microphone for a second.
since you have deals available all over the nation now that it's just not Texas-based, how do you compare deals at various markets to get, because there's more opportunities
That's a
at
great
other parts.
question.
That is a fantastic question. Number one, I'm an engineer, right? I got to understand everything about the deal, right? All the potential deals will have a very comprehensive set of documents that come to you about that specific deal. Business plan, expected returns, why the returns are going to be what they're going to be, all about that sub-market, all about that geographic area, about the competition there. And I'm going to get to know, like, and trust a lead investor before I send them a bunch of money. Now, early on, I was nervous. I was nervous as a cat on a hot tin roof when I wired my first money for my first deal. This guy looked like a used car dealer. He really did. But he'd been in the business.
Wasn't me.
He looked worse than you.
I know you mean.
But he had been in the business for over 20 years at that time, very successful, demonstrated track record. And early on, that's all I invested with, was very well-established leads. Since my confidence and my education has grown and my experience has grown, I couldn't care less if it's a first-time lead or a 20th time lead. If I know, like, and trust them, and that particular deal fits what I am looking for, then I'm very comfortable with it. Again, my frustration is the same one that many experienced passives have. Oh, God, you know, so-and-so's got and it fits my box exactly, but I'm out of capital.
You can sell a child.
You know, if you get the big decisions in life right, you're going to be successful in life. Becoming an Aggie was a great lifelong decision for me. Marrying my wife was a great lifelong decision for me. The third gigantic decision that I had no clue at the time, I looked at it as just a diversification, was joining Lifestyles. I am DFW's happiest member because I have no stress in my life. We'd have never had a house that Lifestyles built on Galveston Island. No financial worries. I'm very relaxed now. My wife recognizes that how much more relaxed I am now. Our time is our own, and the friends that I've formed within this group are a very important part of my life as well. My dad is 93, and he's still blowing and going, right? Part of that is clean living, part of that's genetics. I've got his genetics. So I'm going to be on this earth for a long time to come. If I was just in the stock market and watching it diminish, I'd be really, really concerned. I'm 30 years younger than my dad. Our net worth's going to continue growing through the next several decades. And at some point, when my life comes to an end, both Texas A&M and our kids will come out very well when that happens. That's part of what I'm counting on with legacy. That's a plan of mine, right? At some point, I'm not going to be as able to be involved in lifestyles as I am now, and I'm going to have my kids make these decisions for me with investments. And so, not just for their benefit, but selfishly for mine too, I want them to be as involved in this group as I am now.
There you go. Awesome. You got a question over here?
John, did you set up a trust to handle everything, all of your stuff like going forward in case you get sick or anybody, or are you just letting the family gonna just handle all that?
Yeah, I haven't done anything like that. We do have all the regular estate planning documents. My wife has zero interest in real estate. She's only been to a handful of events. Typically, it's a dinner after a property sale, and the lead is passing out checks. And there's one particular lead that's happened often enough where he made a big production out of fixing to hand me a check, but then he gave it to my wife instead. Best I can do with my wife is I've made a thumb drive I keep on the safe with our schedule of real estate owned and our financial statement. And I've told her, bring that thumb drive to one of two people in lifestyles. I'm invested with one, and the other one would move heaven and earth to make sure that she was guided properly and all, and, getting the ownership out from me to her, that kind of thing. Very simple. You don't need anything other than the regular estate planning documents if you're a passive investor. I still have.
Yes, you could get with an attorney, form a trust. If you want to do that, absolutely. There's nothing wrong with that.
You absolutely can, but I just
members
don't
do.
see any. I'm cheap.
It's an Aggie. Yeah, not much money. You can do that.
If it makes you sleep well at night, then do it.
Okay. I think your microphone just died, didn't it? Or you just touched the button? Nope, it died. Look, Aggies are long-winded, so we kill batteries.
We talk slowly.
Anybody else? Do you have any questions online, quick? Make sure.
I do. How long is the average time you invest in a deal as a passive investor?
I have two properties that were one of my very earliest investments. We still own them today. Great lead investor, great friend of mine. I've gotten back, way over 100% of my original investment. We still own it today.
How long is that?
Sir?
How long is that?
Since 2014.
2014.
I've had others that have sold in 13 months. With one of them, I remember in 13 months, 70% return in 13 months. First property for an aspiring lead, and they have actually become my heroes through time because I've invested in numerous properties with them now, and they've retired me and helped me stay retired. So they're great friends of mine.
So it really is up to you. What do you want? If you're a younger person, you don't want a 10-year deal. You want a 1-year deal. Lots of different opportunities. You decide, and I'll explain the different opportunities this weekend. There's yield play, there's value play. You don't need to know all that minutia. If you're a new person listening tonight, it's what's in it for me. Average deal, our goal is to make about 8% a year, if we can get to there. And we want to double our money every 2 to 3 years. Who'd be okay with that? So it doesn't matter. I know his best deal made a 450% return. I don't want to talk about that. He might have a deal that didn't do well as well. It's what did you do across the board? Triple his net worth, right?
Triple net worth,
That's
even though
really
I've been
big.
retired for 6 years now.
Yeah. So it doesn't matter. You can talk about 500% return or a deal you might have lost 10%. There are deals that, could go wrong. But my point is what's your average? And that's what matters.
I've had, out of 50 some odd deals, I've had 2 that I've lost some amount of my investment on. Both of them very unique circumstances. But I wouldn't be a Lifestyles member if I had been able to pick stocks as well as I've chosen real estate investments, because I'd already be sitting next to Warren Buffett probably.
Who'd be okay with that type of returns? Tripling your net worth, does it make sense? And that's why, and then people go, what happened wrong with the one deal? Doesn't matter, what the situation is. It's the fact of it's raw data, so.
Yeah.
Yep.
But I'll tell you this, though. Keep up with your investments. Track them from the start. Don't be a lazy retired. I wasn't even retired at the time, but I was too busy to really keep up with it. I just put the checks in the bank, and then more and more of them got the ACH deposits, which is really cool. But part of the
Got
reason...
so lazy you didn't want to go out and get the checks anymore. You made them go right to the phone.
ACH can make it harder, though, because when you've got that many investments, sometimes you have to go, oh, crap, where did that one come from?
Third world problems. You have a question right there, Pat?
Yeah, I have a question. You mentioned this other people or where you had money in the stock market or 401ks. So the investments here on the passive side, are these cash accounts or can you roll 401k money into these also?
You can do both. What should you do is a different question. I do have a solo 401k that I rolled a big IRA into while I was still working. Paying taxes is like a dagger through the heart to me. And if I had done it then, I would have paid 40% income tax plus the penalty then. I did not cash out 401k IRA stuff till after I retired and didn't have to pay the penalty. Here is one more fun fact. Retired for 6 years, highest income years of my life. Guess how much income tax I've paid over the last 6 years? We even got stimulus checks when they came out.
This is why he's Dallas's most happy member. He finally learned how to not pay no taxes.
I did. Now, I'm going to have to pay some income tax for 2022 because I had $1 million, worth of income after
You can
return
help
of
the
capital.
poor people finally. You should pay your fair share. Each according to his means, each according to his own. Who agrees?
So one
Capital
follow-up.
gains on a portion of
Which
it.
is, 15% rate. Well, could be higher for you.
The first part of the first $80-something thousand is at zero.
Well, I know, but you're getting into minutia now.
Yeah, you're right.
One last one.
Yeah, so a follow-up to that, you mentioned you did 52 properties, but 2 went south. So the 2 that go south, you just hang on to them and wait and keep watering them?
No, we
Or you just get out?
a group of the more active passives, me being one of them, we did not see a good way to handle that other than to go ahead and sell. And absolutely fine. I continue to sleep well every single night.
All right. You ready? Let's all give John a hand. Thank you, John.